The most requested stock on the channel is not Apple or Amazon, it's surprisingly MPW stock, medical properties. I can't imagine how many questions I got on this stock on my YouTube channel, on my Twitter. Everyone is pretty much asking me about MPW. So I decided to check it out again because I looked at the stock a few months ago and I determined it was actually a value trap. But now it's making new lows every single day. So I decided to take a second look. I'm gonna share all my research with you guys in this video to try to determine if MPW's dividend is safe, if it's a good buying opportunity, or if it's still maybe a value trap and maybe the worst is not even behind the stock yet. I'm gonna talk about all of that in today's video. So again, I hope you enjoy it. Now, most of you are familiar with MPW, so I'm not gonna waste your time talking about the company, but they own over 444 properties, medical properties, and they are a REIT, which means they pay out pretty close to 90% of their earnings as a dividend. And most of their properties are actually in the United States. They have some in Europe and some in Australia. Now, I'm going to try to focus in this video actually the problems with MPW, not what's good with MPW, because I believe we have to get the problems out of the line because the stock is going down every single day. It's not making new 50-week highs, it's making new 52-week lows. And this is one of the biggest problems with MPW. It's very concentrated among their tenants. For example, one of their largest tenants, which is Steward Healthcare, they occupy over 41 properties of MPW, and their shares of their revenue in total, if you count all of those in here, it's around 26% of their revenue. Now, this is a very high exposure to one single tenant. Although the healthcare space is actually a pretty resilient industry and not much happens, but as we had inflation, a lot of labor cost inflation, and many other things have weighted on a lot of those operators like, Steward Healthcare and many others. And actually in 2022, MPW had to give a loan to Steward of, I believe, around $150 million. You can look it up. I can maybe post the screenshot here, around $150 million. Now, that to me would give me a signal that maybe Steward Health could actually be in trouble or having some type of a solvency issue, and they could maybe default on those mortgage payments in the future, which could be a big risk with MPW. And a lot of other operators other than Steward Health are actually facing one of the same exact problems. So one of the risks with those companies, especially MPW, is the high concentration among one or two operators, and Steward Health makes 26%, and the company is not public, so we can't really look deep in their financials. But from looking at many signals, which like the $150 million loan that MPW gave to Steward Health, it would normally tell us and give us a red flag that maybe Steward is actually having some problems and they gave this loan in 2022. Now, looking at the debt outstanding of MPW, they do have a lot of debt, and this is one of the reasons the stock is going down. Over $929 million in revolving credit facility. This is not due before 2026, 2027, but they have some loan in the British pounds. Is due in 2024, 2025, 2026 at pretty stable interest rates. But before we try to assess if MPW can even pay back this type of loan, we try to look at the bond market to see how the bond market is actually pricing in the bonds of MPW. Because if it's pricing it in at a big discount, a lot of the bond investors likely did their research and determined that MPW maybe is very risky, maybe it's going bankrupt, or maybe something bad is going to happen to the company. And if we look at the price of MPW's bond, it plummeted from over 104, now it's trading around 79 cents on the dollar. This is for a REIT, 79 cents on the dollar. This is pretty much pricing in the MPW is either gonna, maybe not actually satisfy the obligation on those loan. It's pricing in very high risk. Maybe it's gonna cut their dividends, but there's a pretty big, discrepancy in the pricing of those bonds. And especially it was yielding around the 1% yield, and the yield jumped from 1% on those bonds to 10% because it went from around 104 to trading at 79 99 cents on the dollar. This is a pretty big discount on those bonds, and pretty much we can determine from the bond market, from the work that bond investors did, that MPW is likely going to have some trouble paying, the debt if they really want to sustain this dividend. But looking at their payments of what is the principal that's due in 2023, it's around 483 million. 2024, 944 million. 2025 is over 1.4 billion. 2026 is over 2.5 billion. This is pretty much, there's no way MPW can actually pay back this debt, and we can see it from their, cash from operations and the dividends that they actually pay. Their cash from operations is around 739 million for 2022, and their dividend is 698 million. So the dividend is still covered, although it's on a narrow margin. But from all the debts they have, I don't believe MPW is going to have enough left over for them to be able to service the debt, especially after 2025 to 2026, even in 2024. So they can maybe only service it by maybe issuing some shares, or maybe the best case they can do is either sell some assets. But the most likely scenario is they're going to have to refinance them to a later date. But here is the trick. If you look at the MPW's bonds, they are locked in at 2.5 to 5 to 6%, 4%, 3%. So this is a pretty good yield. With the way the bond market is pricing in those bonds, I don't believe MPW can actually refinance them for 3 to 4%. They're likely going to pay something like where their bonds are yielding, which they are yielding 10.9%. So MPW might have to pay 8 to 10% interest on those bonds if they actually want to refinance them and they can't pay them off. Now, this might be something that they might have to do, but if the interest expense increases that much, the dividend will not be covered, and then MPW will likely have to cut their dividend. So I personally believe, my conclusion is that MPW's dividend might be safe for a few quarters or something, but I don't believe it's sustainable over the long term. It will eventually have to cut their dividend. If it's not this year, it's next year. If it's not next year, it's the year after. But this dividend is not sustainable whatsoever unless we go back to 0% interest rates and then, things stabilize. Maybe they can refinance them at 3%. But if they're refinancing from 3% to 8, 9, 10%, this is double their interest expense, and it's going to eat away a lot of their funds from operation and stuff. And I don't believe they're going to be able to sustain this dividend, and it will likely be cut in the future. Something else that we can look at with those REITs, which is pretty basic, to try to determine if the dividend is likely going to be cut or not, is to actually compare MPW to other REITs in the same industry. This is MPW is yielding 16% dividend. Over 16%. You have OHI yielding pretty close to 10.5%. This is another one that in some type of trouble. NHI, which is in the same industry, it's yielding around 7.5%. And CTRE, which is in the same industry, is yielding around 6%. So you can see that MPW is yielding over 16%. And this is not by luck, or this is not something that you're just looking at and no other analyst is looking at. This is not a company that's trading in Africa and maybe there's some type of a mispricing opportunity. Everyone else is looking at the same things you're looking at. And whenever you have such a yield, it's likely for very good reasons. And it's most likely a trap, in my personal opinion. And this is typically a lot of things that new retail investors fall for. They go trying to look for the highest dividend yield without actually knowing why is the dividend at 16%. And it's for good reasons, which I believe will most likely be cut in the future. I'm not sure when, but I'm pretty confident that it will most likely be cut. So we talked about all those things with MPW, the potential for a dividend cut. We talked about their massive debt. We talked about their concentration among tenants. And now the question is, how much of those bad news is actually priced in? And the answer is a lot of the bad news is actually priced in the stock, because it's only trading pretty close to 4.5 times FFO per share, which is pretty cheap. The lowest it ever traded was around 3.5 times, and this was in the 2008-2009 financial crisis, so it's pretty close to the low. The company traded as high as 15.5 times price to FFO per share. It stayed at a mean of 10.5 times, and now it's at 4.5 times, so it's pretty close to the low lower end of the range, which could show us that maybe a lot of the bad news is actually priced in within MPW. But we can look at what the management is doing and try to, get some confidence that are the management actually taking advantage from those prices of MPW falling down that much? And the answer is no. The management is not buying any shares in the company. They have been only selling, and the last time they did any transaction was in April of 2022. Now, it's not guaranteed, or obligated for the management to buy back shares for us to determine if it's, undervalued or not, or to determine if there's an opportunity. But I don't know about you. Whenever I'm trying to catch a falling knife like MPW, I would like to have some type of confidence that the management's, own things are aligned with me. Yes, they do own a certain percentage of the company, but I would have preferred to see the insiders actually buying, but they are not buying. They even sold a lot in 2022. Which would make me uncomfortable, with MPW. But going back to the whole story that the dividend cut is likely priced in. This might be true looking at where MPW is trading at. But from my personal experience, every time we have such scenarios with dividend companies and we have high dividend yields, many investors claim that those type of, dividends and stuff, the dividend cuts are priced in. But in my personal opinion, it's likely not priced in. And after the company cuts the dividend, a lot of, dividend type of REITs, a lot of other things, they actually sell the stock because the dividend yield goes below a certain percentage. Many other big investors, they decide to sell after the dividend cut, not actually before. So from my personal experience, it doesn't mean that it's all priced in. Like if MPW decides to cut the dividend, the stock is going to go up 100%. Maybe it's possible on a short squeeze or something. But I just don't believe that really just everything is pretty much priced in and there's no way for MPW to go down. So again, looking at MPW, it could be a buy at such prices. But for me personally, I just don't understand why would anyone actually buy MPW. I personally believe there's many better opportunities out there in the stock market. A lot of other REITs that are actually, beating down. They have a lot of growth. They have a 4, 5, 6% dividend. A lot of apartment REITs, a lot of retail REITs like like NNN, leading 5.5%. And they have some growth, which combines 15 to 20%. If you're looking for a higher dividend yield, you can go for companies like, British American Tobacco or Altria. They pay 8 to 9% dividend. You can sell covered calls on them. And with the premium and the dividend, you could collect 15, 16, 17%. And as the payout ratio is like 40 or 50%, it's not 80 to 90% with such massive debt and massive problem within a lot of, concentration. So again, I don't understand why I would buy MPW. If I had to buy MPW, I would like to buy it after the dividend cut, not before. I would prefer to try to see some type of a bounce, some type of a bottom occurring before I try to buy MPW. But I would personally not buy it before they actually cut the dividend because I believe it's imminent. Now, maybe MPW is much higher and it goes up on a short squeeze or whatever. I am not trying to predict the price, but it's actually a cigar butt type of investment, meaning if you wanted to buy MPW, you have to be willing to either lose everything or just make it, maybe 2-3 times your money in the next 3 to 5 years if it goes back above $20 to $22, which is highly unlikely. So MPW could be a buy if you're a high risk taker, but for me personally, I don't get why I would buy MPW if there's so many different opportunities in the market. To me personally, it's not a buy, but it's up to you. I gave you guys, the bullish case, some of the bearish case, all the risks and stuff. You can decide for yourself if MPW is a good buy for you or not. But my opinion, it's really not worth the risk reward for me. And I think there's, better opportunities in the market. So thank you for watching my video. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.